the average is surging to record levels today, what can you still buy here without feeling like you're chasing this market like a chump? At times like this, we want companies with powerful catalysts and stocks that don't fully reflect their underlying strength, meaning their numbers could go higher. In short, you want Tyson Foods. Yes, Tyson Foods is the largest meat processor in America, because I think it has the potential to be a big, maybe the biggest winner from next week's Phase 1 trade agreement with China. Now that this deal is on the verge of being signed, sealed, and delivered, with the Chinese government actually holding up their end of the bargain, I think Tyson's poised to make a killing. Why? Because China desperately needs pork, thanks to African swine fever, which has devastated their hog population. The United States is the only country with enough healthy hogs to satisfy their demand. Tyson makes its money taking in livestock, pigs, cows, chicken, and turning them into meat. Tyson chicken tenders, Jimmy Dean sausages, Hillshire Farm sausage. They get most of their sales from poultry and beef, but they're the #1 American-owned purveyor of pork. China is a huge opportunity for them. I know I've recommended Tyson before because millennials love protein because of the great chicken sandwich war of 2019. And sometimes my timing has been a little off. But all of this stuff pales in comparison to what could happen with China. That's why we just bought Tyson from my charitable trust a couple of weeks ago. And you can follow all of our moves before we make them by joining the ActionAlertsPlus.com club. Did a big club call yesterday once a month and focused on Tyson Foods and a lot of other stocks, obviously, trying to pick winners after China. That's what we'll be doing 1 week from now, winners after China. Now, you got to understand, the trade war was the only thing holding the Chinese back from massive quantities of buying American pork. This is a staggering figure. Last year, they had to cull perhaps as much as 50% of their hog population in order to stop the spread of swine fever. That's right, destroyed it. Now, they've got some frozen pork stockpiles, but sooner or later they'll need fresh meat because even dictatorships need to feed their people. The stockpiles are running down. The fever's still rampaging. Can they grow their way out of it? No. Why? Because a huge percentage of Chinese hogs are raised in backyard farms, old-fashioned animal husbandry. And those backyard farms have been decimated by swine flu. They're vulnerable because they don't have any real biosecurity in China. In this country, we have industrial agriculture with fantastic biosecurity. Just try getting near an American pig farm. Yeah, they're protected by fence, it's like almost like their Cramer mines protect them. I mean, bullet towers. I mean, you won't believe what is happening with pork in this country. If China wants to come to pork, we have the only surplus because we spend so much time getting it right. Pork is a staple food for China. Without their own hogs, they need other sources of protein. President Trump confirmed the existence of the Phase 1 trade deal on December 13th. Less than a week later, Tyson had already gotten approval to export chicken to China. And shortly thereafter, the People's Republic cut its tariffs on frozen pork imports. When you heard that the Chinese were planning big agricultural purchases as part of the deal, well, it's not just soybeans, for heaven's sake, it's meat. Last night, for example, we learned that U.S. pork exports surged in November, up 26%, and that surge was driven by Chinese buying. I could not believe that Tyson Foods was down today after that number came out. This was before the Phase 1 trade deal. China still had big tariffs on American agricultural exports. Just imagine how much business we'll do now that we got a trade truce. Bye. Oh, don't forget, Chinese New Year takes place on January 25th, and historically, that's the time of peak pork consumption over there. All this demand means Tyson benefits from higher pork prices. And by the way, with pork getting more expensive, well, guess what? You have to believe they'll also sell a lot more expensive beef and poultry, both larger businesses for them as they become relatively less expensive to pork. It's too early to matter, but they also have some killer plant-based faux chicken tenders that, to me, taste more like chicken than chicken. So the bull case here is very simple. Thanks to the Phase 1 trade deal and the African swine fever epidemic in Eurasia, Tyson's earnings estimates are too low. The stock's already darn cheap, trading at 12 times next year's earnings estimates. That's really low. But if I'm right, those earnings estimates will come in higher than expected. That means the stock's going to look even cheaper in retrospect. Excuse me. What is that all about? Here's the crazy thing. Tyson stock hasn't really run since the trade deal was announced. This is despite the fact that even before the truce with China, this company was already painting a very bullish picture. So you don't need the truce. When Tyson reported its most recent quarter in mid-November, the headline results were worse than expected, a modest top and bottom line shortfall. However, the stock ended up rallying more than 7% on the news because management told an optimistic story about the future. Again, that was without China. Now, the numbers are starting to roll in, like last night's pork export figures, and they confirm our thesis. Fortunately, Tyson still hasn't taken off, and I think that's a gift to you. Here's the bottom line. Thanks to the African swine fever epidemic in China, I think Tyson Foods is poised to be the biggest winner from the Phase 1 trade deal, or at least in the wake-up. This is the mother of all catalysts, people, and while the stock had a very big move last year, I'm betting it's still got a lot more room to run. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.